Well, thank you so much for joining us. This is Sondra Yates. Hi, Sondra. How are you?
Hi, good. How are you?
I'm doing well. I'm very grateful that you were able to hop on, and I know that we're all kind of either sitting at home or since we have been deemed essential services, it looks like you are able to go into the office today. How have you been doing with quarantining? Well, I know we're not supposed to say that. Staying at home with
Yes.
3 boys. Is that the reason why you had to make your way down for some non-craziness?
Well, today I had to just come in and grab some items that I couldn't, manage to get online and things. So I stayed here for just a little bit, but safe
Yeah.
and healthy, doors shut. There's no
Yeah.
no clients here, any of that stuff. But yes, it's a little bit more peaceful here, I would say. It's a little quieter. Yeah, but we're adjusting, and fortunately, we've been able to just kind of continue with business.
Yeah, I know it was a little bit shaky there for a little bit. I wanted to touch on that. I think it was probably last Friday. You were basically saying, we had talked on the phone and you were talking about how it was like all of a sudden it felt like the real estate market just shut down for a minute because of all these government loans. I know you can touch on that, but basically the crux of what you were saying was, at least last Friday, it was the day that the stimulus package was announced and released. And so it should have been something that was like, okay, great. But it felt like all the banks all of a sudden were shutting down government loans. And they were just like, hey, we're going to pause on any government loan. So can you explain for a minute just first, what is a government loan versus, other loans? So for people that don't know maybe the difference between a conventional FHA, but explain the government loan part and then why those were halted and where we are now with that.
Sure. Yeah, so really a government loan would be anything that's government backed, like an FHA, a VA, or a USDA loan. So what happens is when that stimulus package was passed, it has some allotments for clients that, a lot of you are out there facing hardship and have had employment challenges or income reductions. So it gives you some ability to potentially have a forbearance on mortgage payments, 3 to 6 month potentially of not making a payment. Of course, check with your servicer first. But when that was announced, immediately all of the servicing companies, their concern is going to be them having to make payments on behalf of those clients that aren't making payments to them. So in terms of the secondary market, which is where mortgages get bought and sold, that's how it gets decided on who is going to be taking your payments after you close on a purchase. That whole environment didn't know what to do with the changes because their immediate concern is, okay, that's great for consumers that need it, and to take that opportunity to make sure that their families are in a good financial state. But then what happens to the servicing company? So we saw a lot of changes overnight. Some programs sort of going away, or credit score requirements going up effective immediately. Just a whole a lot of different changes that happened in a 2-day window. We're starting to see some of that relax a little bit. And I think we're mostly hopeful that we'll get back to a little bit more stability in that market as they start to announce how the servicing companies are going to benefit from the stimulus in terms of having to complete their obligations, even, though they're not receiving payments. So it definitely, if you're in escrow right now on a purchase, it's a great time to get in contact with your lender and make sure that your loan is all intact and, that they understand your employment situation, that your hours, if they've been cut, make sure you tell your lender that. Just things that we need to just go back and make sure that we are covering all of our bases.
Yeah. Okay. So backing up just a minute, basically what you were kind of saying with what had happened, and that'll take us into what you were talking about, how some things have changed. At first they were, stopped and now they're relaxing. But so the servicer is the person that you're making your mortgage payment to. So when you're making that payment, and especially when it's all kind of a bundle, right? So you have your principal, your actual principal that you're paying, you have your interest that you're paying, and then you have your insurance, your taxes, and then if you have even like a mortgage insurance, you're going to be paying that. That all gets paid to one company. That company makes the payment to the bank that owns that company, just kind of puts that payment into the bank for the bank to have it, correct?
Essentially, yeah. So those servicing companies have advanced so much interest on your behalf. And so even if you aren't giving them a payment, they have minimum interest payments that they have to make on behalf of your loan, as well as keeping your taxes and insurance all current. So
the fear was
Yeah.
Yeah. So the fear was basically that these servicers were like, wait a second, if a bunch of people stop paying their mortgage, even though you've stopped paying your payment, we still owe, let's just say on a mortgage payment of $2,000, we still owe 500, like you're not making your payment, but there's still $500 worth of payment for each and every house. And how many homes does a servicer take care of at any given time?
Right. I mean, some of them are hundreds of thousands. So multiply the math out, and it has the potential to have a major concern, like hundreds of millions of dollars of payments that are due, but have no, revenue coming in, which, we're all pretty hopeful that, they're taking steps to, fix that currently, but that's sort of what sent the market into kind of an unusual
frenzy.
Yeah.
Everyone got all weirded out because we're all sitting at home and everybody was freaking out, and probably
a little bit.
Servicers and
we all need some hobbies. Yeah,
they're
clearly.
on Twitter and they're like, "What's going on?" I get that, and that's the part. And so the reason, just because I want to make sure it's understood from a the reason why it affected a certain type of loans was because the government insured loans are typically loans that are designed to help out people that may not have the top end credit score. They may not have a ton of money, a 20% down or a 15 or even a 10% down. So those are considered higher risks. And it also affected on the other side, people that were buying with a jumbo loan. I know we talked about this, but that is also a higher risk loan. So typically, your mortgage payment, the highest loan you can get on a conventional is 4, or has it gone up to 5 now?
510, 400 is the highest loan amount.
510. So let's say you're buying a $1.2 million home, and 510, that means you have to come in with $600,000. You may not have $600,000, but can afford a mortgage payment on a loan of an $800,000 mortgage payment. That's still technically a jumbo loan, but it's considered higher risk. So all of the servicers were coming in and they're like, wait a second, if all y'all stop paying your loans, like we're still going to owe a lot of money. So we're only going to accept right now, for at least pausing all the ones that are potentially even a slight risk for us, because even the ones that are technically the best type of loan you can get, which is good credit score, conventional 20%, whatever that is, we're even nervous about them. So we're going to funnel everything through here. So that all paused. But then as the week has gone on, we've started to see, kind of how I know, my business partner and I, shout out to Josh Leachers. He had, was talking about we're in some deals together where you're handling the loans for our clients. And, there was some definite back and forth where it was like all of a sudden, we had a client that was how many points from qualifying, where now he's qualified. Yeah. He was 5 points.
Yeah, we fixed it. Yep. We just get creative and have to think a little outside the box, get that credit score up to just that little bit of an extra level. But I mean, for most of us, like lenders, like we really want for you, our client, for the realtor, for the seller, for everybody all involved, so we're trying to make it happen. So some of the rules that sort of came back to us, we don't have time to sit and it is what it is. What do we need to do to get that fixed as soon as possible? Mm-hmm. So it really, that's where the communication with all parties and just getting right on it to get a resolution, we did as much as we could, as quickly as we could to make those adjustments. So everybody that had a purchase going on still has one, even if we had to do a program change, or maybe another lender happened to have a certain product still because they hadn't removed it yet. So a little bit of, people that are caught in the crossfires a little bit, but fortunately we're real blessed and everything's been fixed and resolved.
Well, I think that you touched on a great thing, and that was kind of another reason why I wanted to start doing more of these, to bring people up to date on where things are at. But one, it was not panicking and canceling the deal right away. Right. We had we were hearing a lot of stories about how people were freaking out and they're going, I don't know what's going to go on. Their job may have been totally fine. It may have been an essential job where, they're working overtime and getting stuff. And then everybody started freaking out and then just canceling their deal. Yeah. And the ones that were able to stay in, even the ones that under the new guidelines, or at least the temporary new guidelines, didn't even qualify, you were able to, because they didn't panic, they trusted us, they trusted you, they trusted John, they trusted us to be able to deal with kind of the circumstances and go, I'm going to let you figure it out. you know, you're telling right now I don't qualify, but you know, everybody was like, pause, let's wait, let's see what we can do. You're working with even upper level management within your lenders. You know, I was even knowing you, I heard you were saying you talked to 5 different lender friends that are different companies and kind of finding out what programs are you offering? What are you guys offering? You know, everyone's kind of working together right now to make sure that everybody that is still able to purchase or sell, you know, that has to sell or needs to purchase, they can do that. And I think that's the important thing is, you know, it's really easy to get scared because we are sitting home and we're just like on our phone. We're on our computer. We're just reading Twitter or reading, you know, we're reading all the different updates. We're watching Tiger King, you know, and we're kind of going like, you know, we're sitting there going, what is going on with this world? This is our real world. Obviously,
so many levels. Yes.
Obviously, the world is ending right now because if this is an actual non-fictional show and we have coronavirus, there is
disturbing. Yes.
It's wacky. So I think that's great that, you know, it really is that time where we have to take a beat, take a pause, take a breath, and allow ourselves to kind of figure out, okay, what is the main thing? And so, you know, I know for me, one of the things that I've been telling people is, and we've been talking about it a lot with just in our office meetings and things like that, our Zoom meetings, is, you know, if you don't have to sell right now, maybe now's the time to pause, but that doesn't mean that there can't be things that you can do. If you're wanting to purchase and you're a little bit nervous, that doesn't mean that you just wait to kind of get some stuff prepped. And one of the areas that I heard you were talking about, we talked about it a couple of days ago, was, you know, things are taking a little bit longer. So if you just want to kind of touch on, like, let's say somebody does, you know, is wanting to purchase, or they're looking at like, hey, you know, I mean, what used to be school's going to be out in June. Now we're home. So maybe you're home and you're like, I need a school room.
Out.
I need that extra bedroom. But if somebody's looking at purchasing, but they're saying, hey, you know, June, July, what are we looking at here? You know, kind of what are you telling people right now? And what are you recommending, especially given, you know, circumstances and every week's changing a little bit?
So I generally, whether this were going on or not, I generally advise people, you know, if you're 90 to 120 days out from being ready, your best bet is always to meet with a lender and review your options, because a lot of times ahead of time, we may have suggestions on credit or depositing money in your account or how much you might need or what your monthly payments are. A lot of times, if we can work with you ahead of time, it gives you that much more either negotiating or sometimes a higher purchase price or things that are, you know, come into play, that it's really a lot more effective if we can work on it on the front end rather than waiting for that house to hit the market. And that's the other thing too, that even if you're in escrow right now, and maybe to purchase a home, and maybe you have been laid off, right? We know that we have the stay-at-home orders through April, but maybe your escrow just started and your closing date is May. You know, I would encourage those sellers to communicate with their agents and buyers with their agents, because once you have a return to work date, lenders have been given the allowance to use that income again. So if you're, you know, a little bit off, but maybe the seller doesn't want to relist a property, and we all can just maybe take a breath and hit pause and, you know, utilize some addendums and things that are in place to protect both sides in, you know, in this, you know, pandemic really. But perhaps if it all, you know, works itself out sooner rather than later, you can just resume where you were at in the transaction. So I think you're exactly right. It's communication, it's taking a break, just kind of pausing and then just deciding what the best course of action is for you as an individual and for your family, right? Some people maybe it is better and they need to maybe, you know, reconsider the purchase. That's okay too, but don't just assume, because everybody's individual situation can be so different.
So that's a big thing that I didn't, you know about as well. So what you were saying is if people are in the transaction that are currently laid off, but they know it's a temporary layoff. As soon as like you know their start date, you're allowed to use the previous income for their current thing, so they don't have to wait another 2 months to get their bank statements and pay stubs and everything. So that's great. That is awesome. Well, I know that we could talk for, you know, another hour, but I would love to be able to talk again and kind of keep this up, because I know this is a fluid conversation and we can kind of talk about, hey, what, you know, if we talk next week, we can say like, hey, what's the latest that's come up from that, and what are we dealing with now? But I appreciate that you were willing to come and share your perspective on stuff. I know one of the things is, you know, besides just purchasing, you handle refinances as well. And so if people are interested as well, that is another option where maybe you are a little nervous about, you know, where the financial stuff is, but you're kind of like, I have my monthly payment, but maybe I'm thinking I want to sell. You know, refinancing could be something where now you can put some of that work into the house to get some of that stuff done, or just lowering your monthly payment, right? Because if somebody purchased in 2015, the interest rates were, or 2017, the interest rates were around 5%, you know, they were upwards of 5% on stuff.
Yeah.
And so there's high fours, and then now they're in the high threes.
Yeah, I mean, they really are, depending on credit score. And we'll always do the math for you and tell you the time that it's going to take you to recover maybe the payment difference. For some clients, they can make the same payment they were making and maybe cut off 10 years on the loan. For some, you know, we need to just, you know, trim the fat on our whole budget and we can reduce the payment. So I would say it's a great time to just sort of do, you know, a lot of us are doing inventory, either business-wise, professionally, personally, you know, our budgets, you know, it's a good time to just sort of revisit everything and make sure that we're, you know, utilizing what's available to us in the best way possible. So we all come out of this better than we were coming into it, right? More informed, more educated, with a clear focus and plan. So, you know, we can really
a little more disciplined,
do our best
well.
to use this and try to turn it into something that, you know, is a little bit more positive, or as positive it can be, you know, considering everything and the hardships that so many are going through. Yep.
Okay. Well, last thing, rapid fire, little quick questions. Favorite Netflix thing you've seen on Netflix since Shelter in Place started?
I don't know if I should say Tiger King because it's like a love-hate, but I watched it. I'll tell you, I watched it, and yes, I feel a little better about some of my life choices.
Did Carol
Baskin? I'm just kidding.
Did Carol Baskin kill her husband?
Yeah, of course she did.
Okay, you've heard it here.
Yeah.
Sondra Yates, Carol Baskin killed her husband.
Yeah.
And favorite family-friendly show that you've seen? Have you guys watched anything? Have you watched anything with the boys?
You know, most of like the American Idol, singing, those types of shows, the kids get really into that. And, you know, I don't mind them. It's like, you know, some positivity and, you know, people coming out that have had some challenges and have, you know, the ability to overcome. And so I like all that kind of stuff. Yeah.
Any hobbies you're working on?
Hobbies. Work. Yeah. Oh, I forgot that doesn't count. Okay. I'm working on some balance. I am. Yeah. I might have whipped out the crock pot yesterday. Yeah.
Okay. So maybe some cooking. It'll be great for I'm playing guitar a little bit more right now, so I'm working on Here Kitty Kitty from Joe. So I might premiere that one soon.
Looking forward to that.
The first thing I ever put out as a music on YouTube or something like Here Kitty Kitty. I don't know. I just feel like it has a good vibe to it right now. So
yeah, you should run with that.
Yeah. Okay. Thank you so much. I appreciate it.
Good to see you.
And we will talk soon. Thank you.
Okay, sounds good. Bye.